Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take a quick look at our top 10 DeFi coins that I feel are worth dollar cost averaging into as they're progressing down. Again, the whole purpose is to help you kind of find good entry points. You can set limit orders essentially at these price points to effectively get filled if we were to get some candle wicks down, which seems kind of likely just based on Bitcoin constantly digressing in price and testing its 40,500 as we speak. So all good stuff there in that sense. Bitcoin just being Bitcoin, right? We want to be prepared for that in case we're to see that leg down. This is just going to kind of help us prepare for that. Okay, so just heads up on that. That's the whole purpose here. We're going to cover 10 DeFi coins just in alphabetical order. So looking at Aave first. So for Aave, we got some, let's take a quick look at some moving averages. We're well below both moving averages, so keep that in mind. That is not super relevant for this conversation, but I like to bring it up. And what we're looking at, of course, is a few things as well. In other words, 187 would be a round number. And keep in mind, too, I always recommend if you're going to dollar cost average, it's the opposite of profit targets, right? In other words, you want to set your target in place at a specific price point just above a key level support or essentially a Fibonacci retracement level, right? So in this case, 187 is the Fibonacci retracement line. Therefore, I would say 188 would be a better realistic number to shoot for, okay? So 188 would be profit target, or correction, DCA target number one. DCA target number two would be 158, and of course, 143 below that. Okay, so again, I'm rounding up a little bit, but you want to always go, you don't want to be right on the button because you want to try to make sure you get filled if they were to get a candle wick down that low, which is, again, very likely. So that is kind of what we're looking at there. Once again, to recap, 188 for Aave, 158, and 143. All right, looking over here at ALCX. ALCX is interesting. Just based on the limited amount of data here we have with this, but generally speaking, there's some really awesome stuff here. In other words, if the price were to continue lower, which we're kind of expecting, we have this major Fibonacci retracement level at 184. That's also a previous low in December. So good sign there. So to kind of summarize here, the targets that we want to shoot for would be 208. Again, I'm rounding up a little bit. 208, 185, and 151. So for ALCX, 208, 185, and 151. Moving on to Alpha. So Alpha here, what we're looking at is, of course, some lower Fibonacci retracement levels, but some previous lows, if I'm not mistaken. Back in June, which of course was a terrible time for Bitcoin, we saw a really, really low price point that is synonymous with one of the Fibonacci retracement levels here. So I just want to bring that to your attention. That is roughly right around 34, if you round up, say 35 cents. So the targets here for Alpha, if you're not going to dollar cost average at the current price point, we're looking at 40 cents, 35 cents, and 28 cents. Okay, so just some realistic targets here, of course, because again, if we were to get that candle wick down, we could likely get filled in one of those three areas. The likelihood of it coming down lower than 35 cents is pretty unlikely, but it's just good to be prepared and ready for that. All right, so jot those down if you were to: 40 cents, 35 cents, and 28 cents. Now, once again, that is for Alpha. Now, moving on to Comp. Let's take a quick look here, of course, at the big picture. We can see we're below the major moving averages, and of course, previous price action was pretty close to where we're at now. So we're not in the lowest point in which the price has gone. Lowest point on this chart is roughly $80. So the likelihood of it going down to 80, I think, is pretty low. That's literally half the size or half the value of the price right now. So why don't we just go ahead and talk about what is potential, right? So the next major Fibonacci retracement level is 137. So a round number, again, if you're going to write this down for Comp, 138 would be a target for your dollar cost average. Secondary to that would be 126, and of course 108. And once again, just adding a little bit, round numbers, essentially rounding up from the major Fibonacci retracement levels. So 138, 126, and 108. That is for Comp. All right, moving on to CRV. Let's take a quick look at the big picture first. CRV has overall done very well for itself here in the recent past. I do feel like it's going to still, recover. And obviously, if you're a community member watching this, we have an open swing trade with this. I think it's still very likely for that to come back and for us to hit our target. But between now and then, if the price were to retrace, we want to be prepared. And just note, too, the most recent sell-off on December 4th came as low as $2.65. So that being said, we were to kind of estimate, two major Fibonacci retracement levels here, we're looking at right around 324 as a round number. Actually, better off say 325 to be safe, and then of course 285 as another. All right. So 285 and 325, and we only really have two targets there. Because we got this nice 200-day SMA in line, as well as the fact that the previous lowest candle wick when Bitcoin tested a very low price point in December. That was a very tough day. The price bounced back, recovered of course, but it candle wicked all the way down to 265. So if you were to have a third target, a tertiary target, you could say 265 as another option, just below 285. All right, and that's once again that's CRV. Now looking here at Keeper, let's go ahead and take a look at Keeper and kind of see what the potential is here. Good news is both moving averages are below the price action. Keeper has been doing very well overall. So the likelihood of it coming down very hard, very fast, I think is fairly low. Obviously, Bitcoin drops this bottom, we could see some candle wicks down. And if we were to, what we would look at is essentially at 3 different price points. Now you could dollar cost average right now, I feel, and be okay, personally. Again, a little bit of your portfolio at a time. But looking at 1310 as the first initial. So if you want to, potentially take a dollar cost average target sooner than later, you'd be looking at 1310, which wouldn't be terrible. Also 1375, as well as roughly just say 1000 even. Okay, so those are the 3 potential scenarios there for Keeper, and I would say worst case scenario, 700 would be a a 4th target for you for Keeper. Okay, so very good stuff there for Keeper. Honestly, I don't speculate we're going to see the price come down significantly, but if it were to retrace back down, we would not see anything lower than 700. That'd be an extreme worst case scenario. But I do think the 50-day and the 200-day simple moving average are going to hold the price action up. So I think we're okay there in that sense. Link is another one as well. For big picture potential, I definitely think that we're going to hit our profit target as a community, but more importantly, if the price were to come down, it's just a much better value. This is a good coin you want to consider, continue to invest in. And $20 would be the most immediate target. We can see that right here. That's a major Fibonacci retracement level. So maybe just say $20.20, come up a little bit from there, which is actually really close to the current price. So not a terrible idea to consider dollar cost averaging in the 20 to 21 range. That's still a great value. But below that, we're looking at roughly about just say 1830 as a round number, as well as about 1540. Okay, so those would be the 2 targets I would shoot for if I were you in that sense. And I think the likelihood of the price coming in under 1532 is very, very low. So why not go ahead and set your target right around 1540, just above. Again, in case we see that candle wick down, we could see that there. Also note too, the lowest price point in which the price went in July, which was one of the lowest price points for Bitcoin, was right in the range of 1375. So 1375, I think, is an extremely worst case scenario for Link. Feel free to conclude that in your DCA target list, but I do think that the price going below I would say sub 18 is very low. But getting in right now between 20 and 21 is still a good value. That's just my opinion based on the overall ways in which Link is performing. But just know it is taking a nosedive right now, like most coins are, and we want to be prepared for a candle wick down. That's why we're setting these targets. All right, moving on to Maker. I believe this is our second to last. And this one is, of course, lower than the current price point. And if we look at it here, there's a few targets I want to kind of bring to your attention because there's a recent previous low at 1960. That basically is the point in which the price would not go any lower in the middle of the summer. That's when Bitcoin was suffering in June. So that is a good price point there. So keep that in mind. 1960 is a good price in which it could work as a support level. Bear in mind the price is below that right now, but generally speaking, that is a price which we shouldn't see that go too much lower. If it were to continue lower than that, which it's on target for that already, we're looking at 1811 and roughly 1690. Okay, now those are the ones I've drawn out here, of course, so just kind of give you better perspective on what's going on. Again, we're already under 1960, so I'd say the next available target for you, the DCA target, if you're going to write anything down for Maker, you're looking at 1800 as a round number, so 1800 would be good, as well as 1700. And then below that, heaven forbid we lose those major key level supports, we could also see somewhere in the range of 1570. Okay. So 1800, 1700, and 1570 would be the 3 targets you're looking for on Maker. And then we're looking at SNX here. Let's go ahead and take a quick look at this guy. And this has been selling off pretty hard lately because it had a big, strong ramp up in January and February, and then unfortunately, it hasn't really picked up much steam. But regardless, I do think long-term SNX has great potential. But regardless of that fact, looking at Fibonacci retracement, what we can see here, of course, is that the actual next major Fibonacci retracement level, which I think is relevant, in other words, you want to consider this as a potential target, is right around $4.60. So 460 would be the next available. Below that, we're looking at 385 and, of course, 345. Okay, so 460, 385, and 345. And for our very last one here, we're looking at YFI, Euro Finance, and this guy is interesting. I think it's going to continue to increase. If you look at the price action, it's done very well considering how terrible and crazy Bitcoin has been. So I think the likelihood of a candle wicking down is there, but going really low is very low in my personal opinion. So I don't think we're going to see somewhere in the range of 20,000, but realistically, the next available target would be somewhere in the range of about 29,000. You can actually say 29,100 would be a good round number. Then secondary to that would be 27,000, and then tertiary would be 24,000. I think those are three realistic targets that could happen. But anything lower than that, I think, is very unlikely. Again, December 4th, we did see a candle wick as low as right around 17,600. So there is still potential, but I think it's very low in that regard. So just bear in mind, YFI done very well for itself recently, and I think it's going to continue to. Not a bad investment consideration here as well. Also understanding just the fact that it has tremendous potential, and I do think that we could see a 2 to 3x on this coin. And as a community, we are very bullish on DeFi coins. So that's why this is relevant. I'm going to keep covering these every month to help you understand DCA targets. Even once things start to recover, we can still look at profit targets too to shoot for as well, so you understand more specifically what to look for. Okay, so depending on the market, of course, we'll either DCA or profit targets. It'd be nice to kind of help you understand that, just so you can have better perspective and kind of an angle or a leg up knowing where a good place to take profits would be, or adding to your position, lowering your overall price point, right? And once again, just a general recommendation here, of course, when you're dollar cost averaging, only dollar cost average 5 to 10% of your overall available portfolio. In situations like this right now, you should have at least 50% of your portfolio liquid and ready to invest, and dollar cost average as the price goes down. If you have zero or very little, just say sub 10% of your overall account balance available at this point, you're doing it wrong. And I cover all this in my trading academy, so don't get wrong. It's perfectly fine for you to be in that situation. We all do it. It's just that, preparation makes perfect, essentially. And in trading, you want to always try to be prepared if possible. So see if you can try to challenge yourself to have more funds available for situations like this when Bitcoin sells off, jumps up to 44,000, immediately down back to 41. A 5% gap in Bitcoin leads to 10, 15, 20% corrections with altcoins, right? We got to understand that. I'm sure you've realized that by now, but regardless, that's kind of where we're at, and I hope you found benefit here. Of course, comment below if you did, and if not, that's okay too. Consider joining my trading community. And again, I have my trading academy rolling out month end. It's going to be an awesome experience. Looking forward to getting to know you better as well if you join. Have a good rest of your day. We'll see you soon.